Welcome back, everybody. Tomorrow will be Nvidia's earnings, and we're very excited about that here at Chipstock Investor, as most investors are. Before tomorrow, we wanted to build a little anticipation for those earnings by covering some of the things that we expect to hear on these earnings, as well as disputing some of the reports that have come up recently regarding Nvidia and the semiconductor industry as a whole.
Okay, this is great. Before we bring up the first point here that we wanted to take issue with, if you've been seeing some of our videos in the last month, you know that Moomoo is offering you 20 free stocks, a chip stock investor exclusive. It's only good through the end of August. So if you've been thinking about that, or maybe you've already signed up as a new Moomoo user and just haven't funded your new account yet, you've got until the end of August.
I think the first question here is, why is Nvidia such a big deal to the economy?
This is why right here, Casey. So just 2024 so far, 8 months into the year, at the start of 2024, Nvidia's weighting as a percentage of the S&P 500 index was about 3%. Now, Nvidia represents 6.5% of the S&P 500 weighting, right behind Microsoft and Apple. So that means of the S&P 500's 19% year-to-date return, 3.5 to 4 percentage points of that return came from Nvidia alone. I'd say that's the primary reason why everybody is fixated on Nvidia right now. They're kind of seemingly propping up the S&P 500. Really, the Magnificent Seven are propping up the S&P 500's returns in 2023 and 2024. The reason why Nvidia is such a big deal is because all of these Magnificent Seven companies are going through Nvidia to purchase the equipment they need for cloud computing and accelerated computing and AI infrastructure.
This report someone shared with us on Discord, and it's from CNBC, is regarding what Morgan Stanley said about a global tech downturn. Nick, explain that to us.
This is behind a paywall. So if you want to read what it actually says, you can hand over some money to CNBC.
Or
you can subscribe to Semi Insider for just $5 a month. We'd save you some money, and we think you'll get higher quality, more useful information. At any rate, we actually don't view any other analysts or YouTubers as our competition. Big media is actually who we view as our primary competitors. So just throw that out there. $5 a month, Semi Insider. So maybe I'll just reinterpret what Morgan Stanley is actually saying here. We don't think there's actually going to be a global tech business downturn in 2025. What they actually mean is stocks could start to reverse course next year, especially semiconductors. And when they say the AI supply chain, what they're actually saying is accelerated computing stocks. So like Nvidia, AMD. About this being a downturn, it's not the business cycle coming to an end for AI infrastructure and accelerated computing. What Morgan Stanley said is they expect there to be slowing revenue growth rates for these businesses like Nvidia. Casey, this makes perfect sense. We've been showing this graph now all year. We are at that point of maximum growth for accelerated computing and AI infrastructure. Of course, that's going to moderate at some point. Growth rates are going to start to slow down. And we fully expect that to happen as well in 2025. That doesn't mean the business growth cycle is going to come to an end, though. Now, however, as growth rates do moderate, this could cause extra turbulence in the underlying stock prices of those businesses. This is something we've been talking about all along. We do expect NVIDIA's revenue to remain cyclical, and 2025 looks like they will continue to grow, but we are focused on the trajectory of that growth rate headed into the new year.
And while AI infrastructure is a new market in max growth mode, other parts of the semiconductor industry, like consumer products, PCs, smartphones, all types of electronics, but even more so in cloud and enterprise, both of those segments are just beginning the start of a new growth cycle. They've already bottomed last year, and now it's just starting.
Yeah, and I think our chip stock investor CSI community knows this about auto and industrial. It seems like this is kind of becoming a bit of a detached end market for chips that is currently in the midst of bottoming out. We don't know when it will return to full on growth mode yet, but it seems like 2025 could also be the start of a growth cycle for that market as well. Industrial power chips, sensors for automotive and industrial equipment, that sort of thing. Kind of different at this point and detached from cloud, enterprise computing, consumer products, and of course, the accelerated computing portion of that market.
We really don't think that the entire semiconductor market is going to be in trouble in 2025. To tie this back into that report from CNBC, what we actually need is factual information from the semiconductor industry, not CNBC relaying what Morgan Stanley said, relaying their analysis of the semiconductor industry as a whole. But what do actual statistics regarding semiconductor use in manufacturing telling us, Nick?
This is from semi.org, the semiconductor industry organization that represents the global semiconductor industry. And these statistics are from WSTS, World Semiconductor Trade Statistics. You can find these reports yourself every single month. They report global sales of chips by region and by end market and provide updates on their expectations for current year and next year semiconductor sales growth or contraction. On the left, the red line is year over year growth rate in sales by month. And the blue line on top of the red line charted across the x-axis, quarterly semiconductor sales. So we're currently still in the midst of a new growth cycle. Just like you said, Casey, if we strip especially accelerated computing and AI infrastructure out of the mix, most of the semiconductor industry is still in a slump. It's still recovering from the bear market and from the recession. That blue line, you can see we're still not quite back to peak sales that we had in late 2021, early 2022. We're still kind of inching our way back to 600 billion in global annual sales. And according to WSTS statistics, that gets us back to the previous all-time high, expected 611 billion in sales this year, about a 16% rally from last year. They expect 12.5% total semiconductor industry sales in 2025, which gets us to roughly a new all-time high of just shy of $690 billion. That's 12.5% growth. You note a slowdown in growth from this year's expectation of 16%. 2025 is not expected to be a cyclical downturn for the industry. Yes, we're going to have slowing growth rates, but 12.5% revenue growth is still a fantastic reading for next year. We're on the lookout to see just how much the cycle is slowing down next year, because perhaps that will indicate we're approaching some sort of cyclical top for semiconductor sales. At this point, at this very early stage of the game, we do not expect there to be a cyclical top, much less a cyclical revenue decline for the semiconductor market in 2025. That could change, but that's our early expectation based on what the semiconductor industry knows itself.
Just to see where a lot of that spending is going, if you draw your eyes down to the bottom of that chart, you can see logic and memory making up the vast majority of semiconductor sales. Especially memory has made a huge rally year over year and is expected to grow even more into 2025. Where are all those logic chips and memory going? Data centers.
Yeah, this is a chart that we've used a few times now. This is from tech researcher Gartner. This is the total global IT sector, the whole sector, one of the primary sectors of the global economy. 7.5% total IT sector growth expected this year, with a large chunk of that coming from data center systems, accelerated computing from Nvidia and from AMD to a much lesser extent. 24% year over year expected growth for full year 2024. Casey, now I think we're just beating a dead horse here, but I hope we've made the point. Of course, we can expect revenue growth to moderate and slow down in 2025. That doesn't mean an actual business cycle is going to come to an end. It just simply means revenue growth will slow. That is going to cause extra volatility in stock prices. But at this early stage, again, we still think 2025 will probably be a pretty good year for most semiconductor businesses and semiconductor stocks as a result.
You're going to see a chart just like this one tomorrow when Nvidia posts its earnings in Q1 of fiscal year 2024. Data center only $4.3 billion. And in the last quarter, over $22 billion. We can't expect that it's going to quadruple again this quarter, but certainly we know that NVIDIA is going to post some very big numbers. We talked about in a recent video as opportunities for NVIDIA, both gaming and pro biz have seen increases in the last year, and we expect that to continue in the next quarter. All of that revenue that NVIDIA is receiving is coming from some major players, especially in the cloud industry. Do you think that they're going to run out of money to spend at NVIDIA?
No, not anytime soon. So the Magnificent Seven, we again, like last quarter, threw Netflix in here onto this chart. We should probably throw Oracle onto this chart as well. We cover Oracle a lot here on Chipstock Investor and have since pretty early in 2023. The point remains the same. It doesn't change things really. About $500 billion in cash and short term investments sitting on balance, earning minimal interest, maximum 5% per year interest. That interest rate is probably going to start coming down in September, thanks to Federal Reserve interest rate cuts that are now expected. Most of that cash gets replenished every single 12 months. Not all of it, most of it. 385 billion in free cash flow generated over the last 12 months. And free cash flow actually includes the effect of spending on accelerated computing systems from Nvidia. Pretty incredible. So this is one thing that we kind of debunked the whole AI bubble thing last month in a video. But even if this was an AI bubble, I really kind of question Wall Street's rationale. Do you really want big tech just sitting on $500 billion in cash earning minimal interest? I would much prefer them to just continue building very useful assets that get crammed into a data center that support their customers' cloud compute spending growth than I would like to see it just sitting idly in cash earning 5%. I do not invest in big tech because I want them to invest at a 5% compound annual growth rate. So spend away big tech if you spend it on NVIDIA equipment right now. But if you find something else to spend it on, it could be AI related or maybe it's not. But, spend.
That's obviously not advice to personal retail investors.
No, definitely not.
What are we talking about exactly when we say accelerated computing, data center, servers, and AI? Because those words get tossed around very frequently. I think it's important to know what these terms are and to know where this revenue is coming from, where businesses are spending their money.
Generally speaking, especially when talking about the media and Wall Street sell side analysts that get quoted all the time by business media, when the word AI is thrown around, what they actually mean is generative AI or large language models, which is just one very particular type of workload. The bigger secular growth trend, the big umbrella term, is actually accelerated computing. Accelerated computing can handle generative AI and LLMs, but there's lots of AI, lots of machine learning, lots of different workloads that accelerated computing can handle. And so all of this is powering a new generation of servers. Some of them are going into the public cloud, some of them are going into private data centers. But the big umbrella term here that is propelling NVIDIA forward, and we fully expect to continue propelling NVIDIA for at least 5 to 10 more years at a very, very fast pace. There's probably going to be a cyclical downturn or two thrown into the mix at some point, but this is what those terms actually mean. You have existing data centers, current value roughly $1 trillion worldwide. The equipment in there gets refreshed approximately every 4 to 5 years. And then a new breed of data centers purpose built for AI training. And again, that specifically means generative AI and large language models could be worth an additional $1 trillion by the end of this decade. that will also need to be refreshed every 4 to 5 years with new equipment. So we still think there is a long runway of growth for the accelerated computing semiconductor industry. Nvidia accruing most of those benefits, but also a lot of other companies that will benefit along the way as well.
To tee up what we expect from NVIDIA's earnings tomorrow, let's talk about what their guidance was in Q1 for Q2 fiscal year 2025. Their revenue was expected to increase to $28 billion. And that's an increase from $26 billion in the most recent quarter. Not a huge quarter over quarter growth, but up about double year over year. At the midpoint of this guidance, that implies a GAAP net income of $14.3 billion, up 131% from $6.2 billion in Q2 of fiscal year 2024. Where does that put the valuation for NVIDIA?
We've updated our base case assumption once more. At the beginning of this year, our minimum expectation was 50 billion in operating income. Then we bumped it up to 65 billion. And I think at this point, just kind of based on the trajectory of big tech capital expenditures on accelerated computing equipment, we think this has been increased again for NVIDIA. We now think base case at least 75 billion in operating income for this current fiscal year. So if that proves to be true, that means shares trade for about 42 times enterprise value to expected operating income based on our estimate. This is not a cheap stock by any stretch of the imagination, but given that we just don't know how much bigger this market will get before we hit that cyclical top, temporary, we expect it to be a temporary cyclical top and have a temporary downturn. We're thinking at this point, at the very earliest, that cyclical top could be at the tail end of next year, calendar year 2025, maybe calendar year 2026. NVIDIA has quickly grown into our by far largest position since we started Chipstock Investor almost 2 years ago now. And at this point, we're holding on to that position with no plans on changing anything. More than happy to continue holding. We bought the dip last month. We talked about that in a video, disclosed it ahead of time before we actually did it, talked about it with everyone over on the Discord server. If you want more real-time, up-to-date information on what we're looking at and why, Semi Insider, just $5 a month.
So is it a bubble?
A lot of people thought Apple was a bubble in 2013, 2014, and the stock took a pretty good sized hit at that time.
Look where we are now. We'll be having our live Q&A after NVIDIA earnings over on our Discord channel. Make sure you check that out with a membership to Semiconductor Insider, just $5 a month. And make sure you check out those 20 free stocks from Moomoo. Link is in the description below. Click that link and exclusive to Chipstock Investor to get those free stocks. We'll see you all again soon at Chipstock Investor.